Good afternoon. My name is James Gerrish for another direct from the desk for Market Matters. I want to cover a couple of things around the markets today. Firstly, we have obviously had the US federal interest rate decision overnight. They raised interest rates as expected. I want to talk about some implications around that. I want to touch on Alumina, which is a stock in our portfolio that we own that's doing particularly well on the market today. I want to cover briefly the lithium space, Kidman Resources, and ORE that we're actually looking at the moment as a potential buy in the platinum portfolio. So it was pretty much expected overnight that the US Federal Reserve would raise interest rates by 25 basis points. The Fed funds rate over there is now 1.5 to 1.75, which is as per expected. I guess the main issue from a market's point of view was around what they were going to guide to, whether or not we're going to be guided to 3 interest rate hikes for the year or 4 interest rate hikes. They've kept it 3 interest rate hikes for 2018, or that's what the dot plot suggests, but with a more gradual increase in 2019 onwards. So I guess the key takeout from a market's point of view is that steady as she goes. That's what we've seen in the market today, and you can clearly see what the from a currency perspective, what the US dollar did overnight pretty much highlights that it was a more dovish tone rather than hawkish, as in Jerome Powell, Federal Reserve chair, was talking down potential interest rates over and above talking them up for 2018 at least. I guess the key takeout is around the market remains in that Goldilocks territory. Interest rates are going higher, but they're not going sharply higher, is the message from the Fed. I talked about it this morning in terms of the report around the divergence between, or the differential between Aussie interest rates and US interest rates. So although we think global interest rates are going higher, and they clearly are, the differential between what US interest rates and what the Australian interest rate market is doing is widening somewhat. So there's some clear implications for that. We wrote about it this morning around buying US earners. The US dollar should bounce. There was a key implication around what we're going to do with our resource stocks. So if the US dollar goes lower in the short term, resources go higher in the short term, we're going to use that strength in resources as a selling opportunity. So we're well and truly on the sell side of resources in the strength rather than the buy side of resources into weakness at this stage, largely given our view around what the currency will do over time. I'll crack on and look at Alumina first off on the screen in front of you. Just before I do that, just touching on the Aussie market today, we've actually had a pretty good bounce off the lows. So the market based out early on and is now trading at 59.51, so up about 1 point on the day, but it's a strong recovery, about a 30-odd point recovery from the lows. So that bodes pretty well for our market in the short term at least. Alumina up around 4% today. At 247. The stock actually looks pretty good. We've got it in our platinum portfolio, and we're looking for this one to make new highs. New highs would be a move back up above $2.60 a share. Basically, it was around the alumina price movement overnight. So there was a big move up on the alumina price overnight, about $50 a ton. So it went from 375 a ton to 425 a ton overnight. Basically, it's one of the largest alumina refineries in Brazil have shut down from bad weather, etc. This has been happening for a while, and I guess it's really just the catalyst that's got alumina price, or the alumina stock price, moving. This looks good technically. It's good fundamentally in terms of the outlook for alumina prices going forward, and it's one we like, and it's one that's it's in the platinum portfolio at the moment. So targeting 260 or above in terms of alumina. The lithium space has got a fair amount of interest in recent times. We had a position in Kidman Resources that we subsequently sold recently. We took a nice 20-odd% profit on that holding there. A couple of things have happened post that. They've come out with a large resource upgrade. It looks good from a pure numbers perspective. Their Earl Grey resource got upgraded by about 54% in size, so that looks good. I think the majority of that though was already in the market. the price had already moved up ahead of that announcement. And then we saw a broker, Canaccord, come out and with a pretty bullish price target on Kidman. So the stock's trading at $2.33. We sold that around $2.27. As I said, booking a nice 20-odd% profit. We then bring in what we intend to do in the sector. So, we held Orocobre some time ago. Again, we also took a very nice profit on that. And these two lithium companies have started to diverge. Kidman has been strong while Orocobre has been soft. We're thinking at this stage of switching our funds out of, we switched our funds out of Kidman. We're sitting in cash at the moment, whether or not we're going to buy Orocobre around 208. So that's the discussion we're having at the moment. But to me, from a risk reward perspective, Orocobre looks the better play in the lithium space at this stage. The other area that is starting to get a little bit of interest at the moment is in the oil market. The oil market's been pretty strong in the last week, with crude rallying quite nicely. Crude goes into a pretty seasonally strong period of this time of year. The US driving season is the US summer is about to start. Demand for crude is starting to tick up. We've had some more bullish numbers in terms of lower inventory levels. So we've got Woodside in the portfolio. It's been struggling post rights issue, but the broader sector's starting to see some money flow into it. So look, Woodside's having a great day today at 29.48. We're targeting a move back over above 31 and potentially to fill that gap in the chart there, which is just below $31. So in the short term, crude oil looks good. Energy stocks look reasonable for higher levels at this stage. As always, have a great trading week. I'll speak to you soon. Bye for now.